And that's why we bring up NFT Worlds, because NFT Worlds and Bears Deluxe has had more time in the market, so they're going to be more progressed along this chart. Typically, this is time in the market, even though a lot of the times the timeline between these stages is going to be a lot different depending on the project. But we're going to jump in and show just a quick example of NFT World showing this kind of in action. So you can see from day one, you see kind of even though it's really, really small on this daily chart, you see the reveal right here. It dumps and then consolidates for a long time, pumps again, consolidate, pumps again, consolidate right here. And then obviously, it's been moving to the upside pretty aggressively. But on that ownership percentage as well, we were talking about before, one of the things I look for is in this holder map, you can see a majority of people holding NFT Worlds either hold 1 or 2. So that means that you're not going to get dumped on by whales when we move crazily to the upside. Like, it will obviously correct, but it's not going to be as violent as it might be with another project. And you can see that here. Like, so this whale dropped 61 NFT Worlds. He sold 61 in the last month. Like, imagine if there's 10 whales selling 60 at a time, right? That's going to create a lot of selling pressure. But this is pretty balanced because there's really only a few people that have more than 50, right? So Grail, he's just known as one of the biggest NFT Worlds holders. He only accumulates. He almost never sells. So that kind of counteracts this guy, Fox.eth, who kind of tends to sell and take profit along the way. So even though they have a ton of worlds, it kind of counteracts when you have a little bit amount of whales. So that's kind of what I wanted to show on the NFT side. And I think Evan has some more kind of data to break down some tokenomics around NFTs.
Yeah. So just like NFT Worlds, there's a lot of other collections that make it so that you can create almost a passive income with just holding or staking these projects. And so I've thrown together a calculator. I think this is kind of the area that I've been interested the most, because Garcia actually introduced me to the idea that you can have passive income with just holding, or with some of the collections staking your NFTs. So I will say I am a holder of Wulfz. So this is definitely not investment advice, just kind of pumping my own stuff.
Chilling your bags.
Pump those bags.
Right. But essentially, this is just a calculator that runs through the passive income that you can create from some of these NFT collections. And what do we mean by that? Like, with these collections, they essentially have their own cryptocurrency embedded into their blockchain. So for Wulfz, it's called AWU. And I wish I had a link to that. I'll pull it up later. Yeah. But it's at 25 cents right now, 30 cents at the moment. And so it's not a significant amount, but essentially what you can do is you can hop into these collections on OpenSea. You can hop over to their website. And so we'll go to the Wulfz website. Go there. And so at the moment I have 4 Wulfz. So you can basically see that I'm yielding 40 AWU tokens a day. And so what that means is that after 15 days of holding my 4 Wulfz, I'm able to stake a pup, because a lot of these NFT collections have almost child collections as a part of them. They make it so that these long-term holders of these collections can accrue these tokens and then mint other NFTs that are associated. So for Wulfz, there's pups. For Bears Deluxe, which Garcia has mentioned earlier, there's bees and there's hives. So there's many ways to, I guess, make use of the different resources that are within these NFT collections. And so this calculator is one for Wulfz. Essentially, the parent NFT is the wolf. The child NFT is the pup. You can get a wolf at the moment for 0.2 Ethereum. The daily stake is 10, and that's in the AWU token, just so we don't get that messed up. And essentially that's 0.25 cents per AWU. And then each pup can be minted for 600 AWU tokens. And each pup costs 0.1 Ethereum on OpenSea at the moment. But then the interesting part of this is that the pups can also be staked and gain 5 AWU a day. So you start to see this compounding effect of staking these different child NFTs in a collection, and how quickly you can start to increase the passive income that you're getting from just buying a few of these NFTs and holding for a while. So if we were to scroll down from this collection, the tokenomics of Wulfz, by holding 4 Wulfz, like I personally do, you can get your first pup in 15 days. Because you stake that pup, you're taking your daily AWU from 40 to 45, meaning that you're going to be able to mint that second pup even faster. So that's going to be 13 days. And then as you mint, stake more pups, you start to see these times slowly decrease. So you're creating more and more pups faster and faster. And so these are 3 different strategies. Essentially what you can do is you can mint your pups and hold them and stake them. And so you're going to see your days, or the time it takes between each mint, decrease. The second strategy is just get rid of them immediately. Once you have enough AWU to mint a pup, like just sell it on OpenSea for that 0.1 Ethereum. And so you can see that, once this starts to play out over a longer period of time, sorry about that, you get to your 10th pup in 99 days by staking, compared to 150 days by selling after every time you mint. So there's different ways you can play with this. That's kind of what this third strategy is.
Yeah. I'm wondering, like, I'm looking at the AWU chart right now, and like it's going up and down, but I'm wondering, like, what is, because if people are just basically taking their AWU and then selling it for the reward, I think this maybe goes into the NFT project in general in terms of like what utility the AWU actually provides.
Right.
Because in order to like balance the sell pressure from people earning the AWU, you need to have buyers, because I guess hypothetically, like, the AWU would help do something, or like be a part of the project or something like that. I think right now maybe there's probably some sort of arbitrage to be had, which is what's keeping the price where it is, where it makes more sense to sometimes buy a AWU if you have a Wulf, versus waiting, right, to get enough AWU, right? Like there's probably some people making some sort of calculation there to like do some sort of arbitrage where you can actually buy the AWU for cheaper than it would be to, do it otherwise, to then get a pup. Right. Do you understand what I'm kind of trying to say? There's like a lot of strategy probably involved in this, but I'm mainly curious about what keeps the buy pressure for the token.
Well, what's nice is Wulfz did release that shop. And I wouldn't know, we went into this last week, right? Where you can actually spend AWU to then get whitelists, or spend AWU to get
that's right. Yeah.
merch, or do that kind of thing, right? So yeah, actually Evan can probably go into this.
Yeah, well, this is, like you're saying, Mata, just another utility for the token. This is something they've released in the last 2 weeks. And essentially you can claim your AWU, bring it to this portion of their website, and buy whitelist spots for future NFT collections that are going to be minting. So you're basically getting in one at the ground floor, but then if you're familiar with NFT collection mints, you're getting it at a discounted price compared to when the public sale comes. So realistically, these whitelist amounts are, this is $100. I think if we scroll down here, we'll see this Meta Blocks, which I believe is a metaverse based collection for $200, $200 US, And so, there's a significant amount of money, I would say, that can be used for like different utility. And I think so when you're talking about like, let's say I've claimed my Woo from staking my Wulfz. You know, I've got a couple of options here. I can either go mint a pup, right? Or I can take that Woo to a distributed exchange and swap it for Ethereum. And I think, you know, those are the two main paths. And so if you were to go to a distributed exchange, and put in 600 Woo, see what that is in price to Ethereum, you're going to see it hold pretty close to the price that a pup would be. Because I think you're starting to see that that's the main anchor for where that Woo price is. You have to find something in the small Wulfz ecosystem to anchor that price. And so I think you could see with the price of gas compared to, you know, probably there's other gas fees that are needed for claiming a Woo and transferring it to Ethereum. You would see where those would play very closely together.
Yeah, I get it. They're inherently linked. I think the same can be said with a lot of some of these NFT projects that we've looked at. What's interesting is like, what will, like, is the floor price going up going to cause the token to inherently increase? So people are willing to spend more for the NFT, which means that the token, since it's linked to the floor price of the pup, theoretically would then go up.
Yeah,
it's interesting. It's interesting to think about.
Yeah, I mean, I think I mean, all those questions are valid. Like, I think that's probably one of the biggest questions people ask when they're looking at projects that have tokenomics. And it's something that I actually meant to ask in the Wulfz Discord, but a lot of these have like 5 to 10 year plans. So like when Bears Deluxe does their AMA, like they update us on their 5-year tokenomics plan. Like they update us on, hey, here's how many have been introduced to the supply, et cetera, et cetera. Like NFT World's 5-year plan on token distribution. So like a lot of these have like, they're trying to balance out the buy and sell pressure over a 5-year period of time by slowly introducing the supply while also introducing some sort of burning mechanism that gives utility to holders. So it's definitely like, it's definitely a balancing act, right? Like staking NFTs is not as stable as buying a rental property, but at the same time, the barrier to entry is very low. So, you know, that's kind of the catch-22.
Yeah,
that makes sense. Makes sense.
Definitely safer to put your money into real estate than an NFT collection. Sorry.
Sorry.
I said, what were you saying? I think I cut you off.
No, I was just thinking. It's definitely interesting.
Yeah, I mean, it almost back to.
Yeah, what I was gonna say, it incentivizes the devs to like really, you know, if they want each of these components of the ecosystem to succeed, it almost comes down to driving value for like the NFT holders. Because if you drive actual value for the NFT holders, then the floor price will inherently rise, meaning that the token will also rise, meaning that everyone's passive income will also rise, right?
Yeah, exactly.
And more and more people buy in, and you get more and more popularity, and then everything moons, right?
I see the only reason why I'm bringing this up is because I see on Ev's computer he has the Kongs up there. That's a great example of like Genesis Cyber Kongs. So there's only 1,000 of them. They used to generate like almost like 400K a year based on the token price. But now like they're in kind of this period of they need to find some sort of utility for the token. So like they're in roadmap 2.0. So like if you looked at the banana token chart, like it slowly goes down and now it's kind of bottomed out and now it's kind of waiting for roadmap 2.0 to have another utility. But like the best dev teams are ahead of that. Like they don't let the token like absolutely dive and they're like, okay, now it has utility again. But you see the price. So like Genesis Kongs used to be almost 250 ETH because they generated like 400K a year. So it was like, okay, well, it makes sense to just dump 600K into this NFT because I'm almost getting my money back in a year. But now they're trading for like 80 ETH because I think you get like $170 a day. I don't know what that comes out to, but like 70K a year. And now it's trading at like 80, 90 ETH, a Genesis Kong. So like it will fluctuate, you know, pretty heavily.
Right.
Which can help or hurt you. Like if we have a day where a Woo all of a sudden shoots to like $1, like Wolves are going to get swept, like, you know, like immediately.
Yeah,
you know,
totally.
so it's like it's interesting. It's like, you know, it's a double-edged sword.
Yeah, and I mean, like these tokenomics can be found in a number of other NFT collections. Bears Deluxe, just an example, as well. You know, they've got their bears and their bees, and you're essentially earning one honey is their currency, honey D, which is actually, I believe, at around $4.50 at the moment. So like Garcia was saying, like there's a number of these NFT collection tokens that actually have a pretty substantial dollar value. And so, you know, if you have, let's say, you know, 2 bears and 2 bees, you know, you're essentially bringing in, you know, close to $20 a day pretty easily with some of these. So, yeah, it's just a calculator that you can easily understand the ROI that you're getting from staking and essentially breeding some of these NFT collections. But yeah, something that I'll be continuing to check out in other collections going forward.
No, this is awesome. I love this, Evan. And I obviously, right, we're keeping things as constants, I assume, right? Like the price of, in this case, Honey D, the price of Ethereum, I assume we're keeping just as constants in reference to the US dollar.
Yeah. Yep. And so, I mean, I guess I could go through and find different labels, but, you know, you can, and that's the other thing is, you know, this is just an estimator with a lot of fixed variables in here, you know.
Right.
Ethereum's constantly switching around. Gas fees are through the roof parts of the week and not, you know, other parts of the week. So yeah, this is just something that it gets you started on the type of mindset that when you're investing into these, you can also make a little money on the side. So,
you know, there's a lot of
super
people,
helpful.
Yeah, I mean, I was just saying, there's a lot of people who they don't even give a shit about the fucking dollar value of US or of Ethereum. Like they're just trying to stack Ethereum as much as possible because they're like really long-term holders, right? And so for them, it doesn't even, the calculator, I mean, it's a great, like you're gonna get like if you scroll down, like the Ethereum amount is that's constant or not?
I mean, this is you're able to create a bee every 10 days if you had 2 bears, or around that time. And so,
oh right, and that's the price of Ethereum, or that's the NFT price in Ethereum.
Yeah. Yep.
Using that.
Yeah,
Okay.
Ethereum
got it.
constant right now at 2,900. Looks like Ethereum 0.1 to 290 USD.
Yeah. So I mean, you can switch it around here. If you want to look more long term, you can change. Like I'll just change some of these variables, and you can start to see how the graph will switch based on that. So
I think you're bringing up
it's really cool.
I was going to say, so I'm and Evan are bringing up good points about thinking about your portfolio in terms of Ethereum. That was definitely one of the hardest parts for me because like I've made like maybe 1 or 2 trades where I'm positive net Ethereum, but I'm actually negative dollar amount.
yeah.
So it's like if I'm long Ethereum, that's a good trade. If you're trying to cash out USD immediately, that's a bad trade. So it's like you kind of got to weigh that too. Like if you to trade Ethereum NFTs, you should generally be bullish on Ethereum. You know, like you don't want to, if you're not investing in Ethereum, don't invest in NFTs either. You know, so it's like
I love that. Not financial advice, of course.
Yeah. Not financial advice. Sorry. Lawyers, don't come after me.
Just sound logic. That's it. Sound logic.
Yeah.
NFA, but sound logic. That's what we operate on.
But that's the other thing is with some of these collections, it's, you know, I think getting into this, like just starting with it, it was astonishing how quickly you could start to churn out a consistent supply of 0.1 ETH. You know, granted, everything, all the prices stay fixed, which is a big ask. But, you know, just like, you know, it's very easy to start almost creating a factory of Ethereum with just some of these child NFT collections that you're able to breed from the staking of these NFTs. So I think I'll have to find some more down the road that we can look at. Hopefully they've got even better returns.
I think this is just
Awesome.
super helpful in just framing it too.
Yeah.
I don't know,
Yeah.
just framing like that mindset, because it's hard to, you're like, oh, what could this return be? But this really puts it out there for you and allows you to kind of mold some of these things, even like the Ethereum price, which you think it's going to be in 3 months or whatever.
Right.
It helps you make sound decisions, which is what we're all about.
Yeah, this is fire.
Yeah, it's
And
super
this is
cool
something-
calculator.
Yeah, I was gonna say, but before you wrap up, so I was gonna say, Ev, this could be something, if you're willing to link it down, we could put this in the description for people, to use, but or we could make a copy of it, but it's
Definitely.
Not
definitely a useful
shilling
calculator.
wolves, of course.
Yeah. We're not shilling projects. We're just trying to make you guys make money.
Yeah, right. Yeah, I can definitely figure out how to make this exportable. I've got no idea what I'm doing in Excel, so
It looks like you know what you're doing.
it's just the colors.
All right, guys. Well, that's it for WAGMI TV this week. Hope you guys enjoyed. Thank you to the viewers. If you guys like the podcast, definitely like and subscribe down below. We'll have episodes every week, and we're extremely excited to launch this now. So we'll definitely be, coming out with as much content as possible in the coming weeks and months. So thanks again. Hope to see you guys back next week. Signing off.
Thanks, team. Have a good one.
Later.